Welcome back to all of our listeners. My name is Rafael. I'm here with Steve. This is Gold for a New Generation. Today is February 21st, 2021. This is our eighth episode, and it's a market update and a little bit of a chat about the fragile gold market. This episode won't be too long. We just want to talk a little bit about the gold price and some other subjects that we've already covered in our other previous podcasts that we think are important today and that our listeners should consider again. So, first of all, Steve, how are you doing?
I'm doing great. It's some warm weather coming and feels good.
Awesome. So, gold has been trending down ever since August. It's at around 1770 USD today. Um, we've kind of talked about a couple of the things why it's like that. First of all, in 2020, we had a huge run up where gold almost doubled itself in price. And so this is a little bit of a drawback that sometimes is expected. Another reason would be that um, the competitor for the safe haven title Bitcoin has been rallying uh, since from about $10,000 per a Bitcoin to now 57,000, 58,000 USD today, which is crazy, and that might take a little bit of the spotlight from gold. So to our listeners who are interested in investing in gold, they have a sum of money that they might be interested in investing. What would you recommend? What are things that they should think about, consider?
Yeah, so I think this is really good. Like again, as you said, this is a reminder to everyone kind of about the gold market and about some key things that we've been trying to tell people. And I think it's a really important time. We're sitting here, it's Sunday, February 21st. And from my experience in the gold market, big picture, this is a fragile situation that when we started this podcast several months ago, we said, hey, a 10% drop is completely normal. You see that quite regularly in gold, but you could see a 15, 20, or even 30% drop. And I think, where we're standing right now is one of those times where those bigger drops, 20% or 30% from the previous high, is definitely on the table. No guarantees, but it's definitely on the table. So, and for someone coming along now, you want to be prepared for that. Or even if someone who's already invested, you want to be mentally prepared for that and think about how you would take advantage of that. So before I get too specific for a strategy for someone that's say sitting on $50,000, they want to invest in gold. Before we get too specific, I thought to kind of give people a metaphor to think about and think about this potential fragility in a market. I thought about housing as an example. A lot of people are more comfortable thinking about housing prices and so forth, or they're looking to buy a house. Imagine a situation, and this is very similar to I think kind of the situation we're seeing gold. There's a lot of connections, but imagine a situation where we're in some area and we see this enormous potential for housing prices. That we see maybe there's lots of new immigration and we see that immigration continuing for a long time. So lots of demand coming into a market, and we maybe see that there's some scarcity in the market. Not many houses come up for sale, or there's not many home builders in the area. So we look at this and we say, wow, there's these ingredients here for a long-term rise in the price of houses in this area. So what do we do? Well, maybe I go out and a bunch of other people go out and we say, oh, we know this is going to happen. It's very likely. So let's just borrow as much money as we can and buy as many houses as we can. And, initially that helps push the price up. But now you've got some buyers and some owners that are very leveraged and they've really extended themselves. And even though these, longer term trends are in place, we've now created this fragility where we've got some speculative buyers or people that have got very aggressive in what they've done and the leverage. And so anything that comes along, maybe it's just a short-term blip, a winter storm, whatever comes along, and it just slows down the housing market for a little bit. all of a sudden these leverage buyers are in a very difficult situation. They have to sell a few houses to cover off their loan, their borrowings, whatever it might be. A few people start to sell, prices start to dip a little bit. A few more people are forced to sell, it dips more, and then you get this short-term cave in price. And it's not that the bigger picture trends have changed. It's just that you had this huge influx of leverage and speculation that created this short-term fragility. And so what I'm seeing in gold, and we've talked about this, and it's just kind of reminding people of it, is since the US election, more and more people are like, oh yeah, I'm all in on gold. I'm 200% leveraged in gold, or I've gone all in on silver. We're seeing lots of that in silver, lots of speculation in silver. And last time we talked, silver had gone up to like $30. Now it's like 26, 27. But I'm still seeing a lot of that, and that creates some fragility. That creates this situation where price of gold, price of silver could drop quite a bit. Um, so it's just making sure people are aware of that fragility. That it's not, if that happens, this is important. It's not a sign that those longer term trends have changed. It's just more of a shorter term blip to take advantage of, rather than react negatively. Oh, gold is a bad investment, or oh, Bitcoin is doing great, gold is not doing so great, I'm giving up on gold. Um, that's not the way you want to react to those kinds of things. And just to put out some parameters or some ideas, a 30% drop from the previous all-time high of what it was, 2075 or so, 30% drop would be into the 1400s. So I think that's possible. And certainly, how I see speculators kind of talking about gold and silver these days, definitely that's a possibility. No guarantee. Um, so knowing that, how should someone take advantage of that, or how should someone kind of consider that in their strategy? So first thing is, if you're just dollar cost averaging, 15% of your monthly RSP or your 401k, you know, or whatever your savings are each month, is say going into a gold fund, that's great, right? You're just taking advantage of any price drops when they happen. That's great. Or if say you're split up, I want to put in 50,000 into gold, split it up into 20% chunks. 20%, you should probably at least own 20% of that now, of that, whatever that amount you want designated. And maybe if gold drops into the 1600s, do another 20%. If gold drops into the 1500s, do another 20%. If gold drops into the 1400s, that's probably the time to say, okay, I'm putting the rest in. And as long as you're in the right mindset of, you really, you want that kind of situation. You want people to be forced sellers so that you're buying when people are forced to sell. That's a good thing. So I think that's a reasonable strategy. I do want to say there's no guarantees, and that's why you do want to have some gold. So if gold shoots up, um, even if it's just an interim shoot up, you're not going to kind of uh, get too excited. It's, oh, I missed out, and now I've got to throw a bunch more money after the price has gone up. Um, so that's the kind of strategy that you want to have, and you want to have some patience to that. It's not like this is necessarily something that's going to happen in the next 2 weeks. If it does happen, it might take a few months. And that's something we can talk about going forward in this podcast. But, I think that's just an important reminder to people that there is this fragility that I can see from my experience being around gold for 15 years. And silver, particularly, I see a lot of fragility with all the speculation and speculative money rushing in that, can rush out just as quick. Um, so I think that mindset, potential for price decline, having a decent strategy going forward, and that patience, that's the message. We've said it before, but I think right now, here as we sit February 22nd, it's an important reminder to people that they have that mindset for gold going forward here.
Okay, that was an awesome recap over some of our previous subjects that we've covered in these podcasts. Anything else you want to chat about, Steve, today, or is that it?
I think that's pretty good. I think again, that's we just wanted to get that reminder out to people, and we'll have we do keep kind of hinting at other great topics for our podcast, but I just thought as we discussed that just having a reminder to our listeners at this moment in time is probably pretty good.
Okay, awesome. Thank you very much.
Yeah.
Bye.